Greetings and welcome to the Soda podcast. I'm Chris Ostrowski. Today we have Crunchfish CEO Joachim Samuelsson with us to discuss digital payments and the Crunchfish Digital Cash Layer 2 architecture. Joachim, welcome. Tell us a little bit about Crunchfish and about your story so far.
Thank you, Chris. Happy to be here. Yes, Crunchfish is a company, we're sort of a deep tech fintech company, and started with digital cash in 2020. Early January, we filed a patent. We came up with what we thought was a really good idea. And that patent has now been actually granted to us in the US, in Europe, Taiwan. We're waiting for India and China on it. But it's taking us some time actually to get our solution into the market. And I announced actually just 3 months ago in my CEO word in our Q1 report that we have a turnaround situation. 3rd time's the charm, I described it. And it's an interesting one because it's the first attempt going to market with our offline payment solution. We did it in a trial in India, or a pilot under the guidance of RBI, the Reserve Bank of India. We had the biggest commercial bank in India, HDFC, and there was a digital first bank, IDFC First Bank also that was part of it. And it went really well. Everybody was happy. The solution was officially approved by RBI at the end of the year 2023. But we realized, and that was the feedback, certainly from HDFC, that this really needs to go into the ecosystem. It's a great innovation, but it can't just be done by payment service providers. We really have to look at it to put it into basically the network. And the network provider, the mother of networks, all of the provider in India is NPCI, the National Payment Corporation of India. And HDFC being one of the, I think it's the 2nd largest bank just after the State Bank of India. They went to NPCI and said, you really have to do this. You should do this because it has to be an ecosystem innovation. And that's because if you don't have the ecosystem with you, you don't have acceptance. You don't have universal acceptance. We just had 2 banks, and India has 1,000 banks. So chances are quite high that you're not finding a friend that is from one of your 2 banks, the one we had. We had an idea of how to scale it, but it would probably have taken too long. So I think they were right. We need to go to the ecosystem. And we approached NPCI as well and said, hey, take our solution. And we worked hard during last year. This was the 2nd attempt, trying to convince NPCI, you really should take our system. But it turned out at the end that they didn't really want to pay. Because the reason is that a network provider, what do? Well, they accept payments and they process payments, but they actually they're not paying. Who's making the payments, that is on the issuing side. That is done by the payment service provider, not the payment network provider. So they were not really willing to pay for that. So what happened was that we discussed for a long time, and we finally understood that we're not going to get top dollars out of NPCI. So an idea we had, this was the 3rd time's the charm, was that how about this? We split our product into our solution into 2 parts. The receiving part that the network should have, and then we should just have to, this is very similar to the card model, the issuing side, this is the banks and the payment service providers, they should have the wallets. Why don't we just split the solution into 2 parts? And we came with that 3rd time's the charm, the turnaround situation in May this year. And after that, everything has changed for us because now all the dialogues are going the right way. And it's a very natural split, and it's not foreign to the payments world because, as I said, it's exactly how it's done on the card networks. The MasterCard and Visa are the networks, and the banks and the payment service provider, the banks are the issuing side, really.
So it sounds like you've adapted the product both from a business model point of view and a kind of ecosystem first point point of view. So
Well,
you've adapted the product to fit the ecosystem, and you've changed the sort of commercial model in terms of what the buy sell is for the actual Crunchfish solution at the moment.
Yeah, you can look at it, Chris, as it's sort of essentially it's a product packaging issue, really. Everything still applies. All our patents applies. The solution is still there. We always had an interesting asymmetry with our solution. Is that we've always had that on the sort of paying side, the issuing side, what the end user would have in their hand, they need a wallet, a secure wallet. You absolutely have to have a secure wallet. Because otherwise you could double spend. If that one is not secure, everybody will sit at home and create their own money. So that needs to be secured. But we always had the asymmetry that it's not about wallet-to-wallet transaction. It can be, it certainly can be, and then you can pay forward and everything. But it can also be wallet to a terminal. A terminal is a word we use, and that is essentially just like a card terminal. It's not a physical device. It's just a device that is able to receive a payment but not pay forward. The only thing that the receiving side does is to it would first send a payment request. It would then receive a payment and be able to validate it, even in complete offline mode, store it if you don't have connectivity, and then forward it for settlement. That's what a terminal does. And that piece, that can go into the network. And it doesn't need Fort Knox security, because that terminal is actually just receiving a cryptographically signed package that the sort of receiving side, you can't do anything about it, because if you tamper with it, then the signature is not valid anymore, and it's simply not. Everybody can see that it has no integrity anymore. So that's why paying side needs high security, a secure wallet, absolutely. But on the other hand, the terminal side, which can go into the network, then that doesn't need to be really of high security at all, really.
And this wallet to terminal part of the story is, I think, very important in the digital payments, CBDC, stablecoin, tokenized deposit story at the moment, because there's so much focus at the moment on a variety of sorts of digital payments. The recent IMF paper that Soda Services, you were kind enough to help contribute to, and that IMF paper focused on CBDC payments in countries where there is little connectivity or very poor connectivity, and the wallet to terminal payments is important there. So tell us about how that Crunchfish solution that you just described can particularly help with the offline payment elements.
Well, if we look at that wallet to terminal, which is sort of we've always had that, but we never actually packaged really clearly our product and understood that we need to go to market, that the wallets absolutely needs to go to, on the issuing side, to banks and payment service providers, but the network could just take the terminal, because what they can do is to take in the terminal into what typically is always there. The network needs a common way to trust that a payment application can pay online. In India, which I'm very used to, they call this the common library. UPI stands for the Unified Payments Interface. And MPCI, who is the product owner of UPI, they deliver also on behalf of RBI, they deliver also the digital rupee. And there is a common library there as well. So anyone who's all the banks, there could be sort of different banks that can pay, have their users to pay on UPI or pay on the digital rupee. They need to have that common library. And the reason is that the network needs to be able to, in a common way, trust that those third-party payment apps is actually, can be trusted. So there is a common library that is integrated in every single app. And the interesting thing is that you could put this terminal of ours, but basically a terminal, a way to receive payments. You could put that into the common library. And what that means is that you could enable universal acceptance. Anyone who can pay online because they need a common library then, will be able to then receive an offline payment. So you don't have to wait until everybody has a wallet, because that could actually take some time to get all the banks there. But if you overnight could get everybody to be able to receive, then you have solved the P2P case. And as you know, in India, a lot of the smaller merchants, they rely, even the it's not like cards are very, the card network is not really big, so it's maybe 5-10% of the merchant would have card terminals. The rest is just on the real-time payment system of UPI, or so this you would enable a lot of merchants as well by just having that terminal, and then you can get the terminal out, and that means you have that universal acceptance, and then you could incrementally over time get the issuing side on board. But they would be interested to get on board because everybody can receive. You have solved and that's always with the payment system. That it's not unique to offline payments. The toughest thing to solve is the acquiring side. That's the toughest thing to solve. So, and we solve it overnight with putting into the common library, and then you can incrementally try to put the same sort of software, the terminal software, into various merchant POS devices as well. You can do that also, but that would be gradual over time. But you would have a fantastic start if you can start on having the ability to receive into the common library, and that is what's going to happen.
And so and I think this kind of rollout first, or acquisition or acquiring side first, is something which is probably a little bit of a flip side on how a lot of people have thought about digital monies and even thought about CBDCs, because many people have thought about how do we issue, how do we get the token, or how do we get the digital money into people's hands. But if you instead think, how can a merchant or an individual receive a payment as the first port of call, then that adoption challenge, that scalability challenge, that usability challenge is kind of met at the first point rather than being met at the last point. I mean, on the offline element of this, which is sort of quite interesting, are the terminals, the Crunchfish terminals, once they're in the common library, either on a POS device or on an individual's device, are they better suited to receive payments when there's poor connectivity or patchy connectivity? Is there anything about them that enables those places where there is low internet access or poor coverage to receive payments in the way that you describe?
They work exactly as if it is sort of a wallet. You know, a wallet needs a wallet who is on the receiving side. If you think of a wallet to wallet payment, it needs very similar software. How can you trust? How is it that you can trust a payment when you don't have online access? How can you trust that? Well, the way you trust it is that you have to first establish a trust infrastructure. And that is done with standard PKI, public key infrastructure. So on the receiving side, what you trust is the public key of the system itself. So if say this is in India, it could be MPCI then, who is the network provider. They hold a private key, but everybody can have the public key of MPCI. And what you do on the issuing side is that any wallet who should pay, they have a private key. In order to cryptographically sign anything, they have a private key. They have an associated public key with that private key on the issuing side now. And in the setup phase, you need to get that public key of the wallet certified by MPCI in that sense. So when you send a transaction in offline mode, you would sign in also the certificate of that public certified public key of the wallet. It's certified by the system, and that is what can be validated. That is what you actually trust in when you receive. And that sort of PKI setup is the same for a terminal as it is for a wallet-to-wallet transaction. So it's sort of no difference, really. The key thing for us as well is that, yes, we have as an SDK our terminal, but if you are a network provider, and a network provider would be any central bank who would want to issue a CBDC, they are sort of then the network provider of that system. Or it could be a commercial payment network like UPI in India, as we've been talking about. You need source code. You absolutely have to have source code for what you as a network provider put out. And the reason is that there are so many payment services that depend on you. And you don't want to get into any hostage situation with any technical vendor who says, well, okay, I'm going to raise my prices to you or whatever. So you absolutely have to have source code. And we've seen that in the ECB digital euro request for a proposal. They need source code. They need control. And the same is true in India. They've asked us that we absolutely have to have control. And we don't want to pay, we don't want to pay per anything. We want to maybe pay you something up front, but then after that, it's ours. We need to do whatever we can do with it. But the good thing for us is that when we split the product, as we did in our turnaround here 3 months ago, we're not giving them the wallets. We are just giving them the source code to the terminal. And we are also helping them with, here is all the protocols, how it communicates offline with wallets and API calls online. So if all the infrastructure around the terminal, we can give them. And the setup we have, we don't lock them in, because anyone who could adhere to this standard, anyone who can adhere to the standard could provide a wallet. So we're not forcing them to use the Crunchfish wallet. We have a great wallet, but we don't forcing them to use ours. They can use any wallet, but they need to own the acceptance side, and they have to have it completely controlled by them. And we're offering them. And this is the fantastic part, which I don't think people are aware of. We offer this for free. We offer it for free to payment networks, to central banks. You could enable your payment network to get all the properties here that I'm sure we're going to talk about, but one would be resilience, that anyone can receive offline, and we're not even going to charge you for it. And that's really a compelling story, that you could make the network resilient. And we can probably talk about more things you can do, and then you could gradually allow, other, on the issuing side, other banks or third-party application providers who do mobile payment apps, they can come on board. Yeah. As long as they have a wallet which is secure. That's otherwise you wouldn't want to put them on, because then they would sort of be double spending. Yeah.
Indeed, and the Crunchfish soda fact sheet that you can see in the description box in the link below this video, we talk a lot about the future of payments and balancing cost, resilience, seamless integration, and allowing for that instead of next generation. But I think the thing that really stands out to me is that the focus that Crunchfish has got here is allowing the integration and allowing the acceptance of digital payments and enabling everyone to use it without having to go through the difficulties of rolling out an entirely new system. And give us some of the kind of real life use cases. So talk about what difference this would make to a simple transaction in India when this is rolled out. Perhaps, you spoke about giving change in digital form. That's an interesting one. Tell us a little bit more about that, how the people on the ground would really see that.
Yeah, as we said before, that if we put it into the common library, anyone who can pay online needs the common library, and then they will also be able to then receive offline. But if you have enabled the whole population, anyone who is digital, can pay digitally with the ability to receive. One cool thing is that we could flip it around, and an interesting use case, I think particularly for CBDC, is that if you think of a case where the customer in a store has chosen to pay with cash,
Hmm.
They come in and they pay with a banknote, and chances are quite high that it's not on the exact amount that
Hmm.
they're going to pay for. So after they have handed over their banknote or banknotes, um, who owes who flips. So it's
Hmm.
all of a sudden it's the merchant that owns the customer something.
Hmm.
And what typically would happen is that you would get that change back in central bank money again. You will get physical cash back,
In
coins,
coins
and
or notes, yeah.
yeah, exactly. But think of it, if you could sort of solve that for many of those cases, you can return with digitally instead. And I think it's a nice CBDC use case because they pay with central bank money with a banknote, and instead of getting it back with another banknote issued by the central bank, they can get sort of CBDC back, which is also then backed by the central bank. And for us, that is quite an easy use case to solve because the only thing we have to do is that we now have to equip the merchant
Yes.
with the wallet. Now the merchant needs to do the wallet, and everybody has the ability to receive those layer two payments, as I referred to them, if we have this terminal software into the common library. All of a sudden, you have universal acceptance because it is a person who typically normally would sort of be paying, say, online with their sort of app, and
Hmm.
we have enabled them to receive also offline. They some of those transactions could also go. This is the interesting thing that we what we have with our layer two system. If the merchant will be online, our layer two system could immediately then send this layer two signed out payment to the back end of on the merchant side, and then that will be processed, and then the customer would immediately know, okay, I've got my change, I have it
Yeah.
in my bank account, I got notified. But our layer 2 system solves also for the case, say that the merchant is offline, say you are in some sort of where I think you use the word in the IMF report, connectivity constrained areas,
Yes,
or it could
exactly.
be an outage. There could be an outage that there's something which is temporarily down with your connectivity, or an outage in the back end. But then this works then it will works in proximity instead.
Hmm.
And we will flip it that the terminal is now actually then with the user. It's just
Yeah.
that the merchant has the wallet.
Yes, indeed. And I think this is the sort of thing where, we often talk about CBDC adoption, CBDC use case. And what you're describing here is very interesting because the Crunchfish Digital Cash solution focuses on how the merchant can play the role in seeing the use case for a form of digital cash, for a form of CBDC straight away in the form of giving change. And I think that's quite compelling. I mean, you spoke about the connectivity constrained environments that we covered in the IMF paper. That's also in the description box below. We interviewed many vendors, many digital money vendors, when we were researching that paper with John Kiff, my colleague, and with the IMF colleagues. And probably the sharpest disagreement between vendors lay in this area around hardware-based virtual secure elements and hardware-based secure elements and software-based virtual secure elements. Some would say that a VSE, a virtual secure element, will never be secure enough for a central bank, for a CBDC. And others would say that only a software-based VSE, virtual secure element, will enable the agility, the rollout capacity, and the scalability that's necessary for a CBDC to ever be used. And there wasn't really much common ground, really, in vendors here. So, how do you think central banks can make well-informed policy decisions on technology issues like this?
Yeah. I think it is to understand better what are the
Hmm.
issues really, and one issue. What do you need? Because you absolutely need to have high security on the wallet side. You need a secure wallet, but what do you really need? You don't, in my opinion, I'm on the latter sort of side here, that I would argue for a virtual secure element solution at this time. I should say that Crunchfish Digital Cash, our solution, we are agnostic. We could apply it in hardware and we can apply it in software, but we have chosen to use a software-based approach in a virtual secure element because it is currently the only thing that scales. You do not get scalability, meaning that in a market which has a variety of phone models, which all markets really has, you don't, there is no ecosystem to distribute a secure wallet onto various sort of models in the market. There is none. And because of this, I would argue that already there, the hardware-based approach has gone wrong. Because if you're a central bank and you want to have your citizens to be allowed to sort of come on board and pay, you really don't want to start with saying, well, it's only if you have the top-end phones. You have to have that Samsung, or that you could use it maybe with iOS or an iPhone. You really want to have a quite a wide, and certainly if you look at where connectivity constrained countries, there's a lot of low-end smartphones, and you really want to get to those. But the crux of the matter is that yes, you can deploy a hardware-based solution on a phone, but it's really challenging. And I am actually quite happy that the IMF paper, and that's actually for the first time, is actually spelling it out, that it is challenging to deploy and also upgrade hardware-based solutions. Because before it's just been, as you said, the hardware-based proponents who talk about that, they say, well, we need maximum security. We absolutely have to have maximum security. And they argue that nothing but hardware can deliver that. But and as you said, on the other side, there is someone like me who says, well, I think you need high security, and you can get very high security with a virtual secure element as well. Because essentially what you need is an isolated runtime. I think it's important to understand, what do you really need in terms of security? What does that mean? And an isolated runtime means that you cannot use the same runtime that apps are running on. It's called a rich execution environment. You can't just use software and do obfuscation and white box cryptography. It will be cracked in if not hours, but in
days,
weeks, in days or weeks. It will absolutely be cracked. But if you have a virtual secure element, what you actually have is you're running it on a virtual machine. It's a separate sort of, all your execution is separate from that processor on the mobile device, which is run by Android and iOS. And that is what you need. And that can be delivered, and that's not really odd technology at all, by a virtual secure element. So if you understand really what is it that you are looking for, you need that. And I think you cannot deploy a solution which is not deployable in the market you're in. It's a fact, there is no ecosystem. Whereas a virtual secure element is actually compiled into the app itself. So the distribution ecosystem is through app stores. You get it out everywhere. So for me, this is just a simple, if ever in the future, and there are some initiatives from global platforms. One is called SAM. It stands for Secure Application Mobile. They have been around for many years, but never been any sort of clear sort of a strong drive to really implement them. But if that comes along, which may happen in a few years, we could adopt to hardware as well. But I don't really still see the point. And there is another very important point as well, but that you cannot look at security in a myopic way just on device, because I think the problem where is no an agreement here is that the people who say a virtual secure environment will not be safe enough, which I will sort of argue with that it will, but their idea of the architecture is that you fund your wallet and you could pay offline, and then you can just, if I pay you, Chris, you can defund it, and so you move the token basically like a digital banknote. You move the token from me to you, and you could just claim that or change that to, or put it on with commercial money on your bank account. We do not believe in that model. That is not secure. Even a hardware-based solution is not secure enough. You will be flying blind as a central bank if you allow that to happen. And what is then built in is some adjunct centralized reconciliation systems. And this kills the privacy of the system because it's a centralized keeping track of all transactions. You really don't want that. What we say as a really difference here is that you transact between wallets. That is sort of one step. And then there has to be a subsequent settlement stage. And that is the stage that updates the core ledger. You do not want to contaminate the core ledger with wallet-to-wallet transactions. They need to be validated online before, because otherwise you risk the integrity of the core ledger. You have to, that's what you need to protect. You could live with if someone has hacked their wallet, which is extremely rare. But if that happens, you can sort of find that person, because it's not hard, because we're not talking about an offline system that stays offline forever.
Yes.
Yes, it needs to seamlessly work with the online world.
Indeed, and this is one of the things we covered in quite a lot of detail in the paper, that there is actually no central bank that is proposing a completely offline solution that never goes back online. And even though many tech vendors said that they could do that with their system, and a hardware-based system could do that, or even a software-based system could do that, there's actually no desire to have a totally checked version of any form of CBDC.
I don't blame them.
And so I think that being the case, you don't have to decide, well, what sort of checking do you want? Do you want to build a new system? Do you want to use an existing system? Do you want to have a system that enables privacy? What are the policy priorities? And the IMF paper talks about this in quite a lot of detail. And also, as you said, starts with a kind of device first model. What is the device in people's hands? If you're going to roll out any form of digital money, any form of public digital money into people's hands, the device in people's hands today matters. And I think that's something that there was agreement on. As we get to the end of this podcast, Joachim, I'd be interested to know what's next on the horizon for Crunchfish. Is it more on the CBDC type stuff, or is it other forms of digital payments with payment network providers? Where do you see Crunchfish having the most engagement over the next 12 months or so?
Well, our strategy with this turnaround idea, third time's the charm, is very clear. We would like to go to the payment network providers, and that is the central banks that provide. A CBDC is a payment network, but it can also be commercial sort of networks. We have convinced MPCI, this is in India, to go for this model. They're going to take it. They've taken it to heart that the network should be on the acceptance side, and they are going for this multi-wallet approach. That it could be our wallet, but it could be other wallets as well. So India is sort of, a really focus to us, because it's happening there. And in India, what we will be focusing on is sort of to buy a revenue split model, because if the issuing side is willing to, say, charge their end users, we can revenue split that. Or alternatively, if they don't want to charge the end user anything, well, then we will have some sort of annual subscription fee, but it could be low. It could be sort of it's certainly much less than $1. And so that is quite compelling. There is no other fees for our systems.
Mhm.
Remember, we don't charge the payment networks anything. There's no terminal fees. There is no transaction fees from us. The only it is a fee which could be borne by the end user or alternatively by the payment service provider. So in India, is happening now in India, which I'm extremely happy about. And there our focus would be to go to payment service providers. But we go wide now. I
Mhm.
presented this in Bangkok at the Digital Currency Conference end of May, and it was an overwhelming response. The idea that even for offline payment system, we're going to sort of, in a way, mimic the card model, that there
Mhm.
is a network and we can now help them to get resilient. And then there is an issuing side, and this is where the wallet should go. And the response we got there means that well, we're going to be very busy. So I think there is 6 conferences for us coming up. We're going to be in Bahamas for the CBDC conference. We're going to be at Cybos. I'm going to go to Bali to talk about the digital change. We're going to be at GFF. I'm going to go to Miami. Probably forgotten someone, but some conference. But we're going to really focus to try to get payment networks to
Yeah.
understand that they can do their part, because if they do their part and we can do that for free with them, then they have solved the acquiring side quite a lot, and opened up that incrementally over time banks can come on board to enable
Yeah.
the end users. That's the strategy we have. It's very clear for us, and we're going to work hard sort of with this two-pronged approach with networks and the payment service providers.
Thank you very much, Joachim. So if you're in Bali, if you're in the Bahamas for the CB and DC conference, or if you're in Cybos at Frankfurt, then Joachim will be there. But please do get in touch as well if you want to reach out to him further to discuss this more. His website and the Soda website is in the description below, and and feel free to reach out directly to me if you want to know more. And many thanks for tuning in. As we said, the IMF report and the Soda Crunchfish fact sheet can be found in the information box, and we would welcome any further comments in the comment box below. Soda Services is a digital money consultancy based in London, and please contact us if you wish to continue the conversation. Thank you and have a good day.